Today's webinar will focus on the surety bond services that Shepherd Insurance can provide to our clients. Presenting today will be Briggs Orsbon, Nikki Rutledge, and Lisa Parsley. The recorded version of this webinar will be available following the completion of this session. You can look for a link to the recording and the slide deck for reference emailed to the email you registered with in the coming days. We'd love to hear from you, but we ask that you please hold all questions for our Q&A session toward the end of this presentation. However, the chat will be open and monitored throughout the entire webinar if you need clarification. For those of you just joining, welcome. Our presenters, Briggs Orsbon, Nikki Rutledge, and Lisa Parsley are here to speak on Surety Bonds 101, the basics of surety bonds, and the services offered at Shepherd Insurance. Briggs, the floor is yours.
Thanks, Mary Ashley. And like Mary Ashley said, we are recording today, so this will be shared out. So if you want to go back and watch at a later date, you can, or if you want to share this with someone from your team, you can do that. Like Mary Ashley also said, you're going to be muted today, but the panelist team will be talking to you. If you have questions, enter those into the chat and we'll address those after we go through the material here. Thanks for joining us once again. Thank you to those clients that are on the call today. Appreciate you guys and your business. We appreciate everything that you guys do for us and supporting us and allowing us to serve you and your insurance needs. So thank you for jumping on here and giving us some of your time today. I want to introduce myself real quick. I'm Briggs Orsbon, executive partner and also president of commercial lines at Shepherd Insurance. Today I have Lisa Parsley and Nikki Rutledge, both surety specialists on our bond and surety team at Shepherd Insurance. The goal of today's webinar is to kind of just walk you guys through our capabilities on bonding and surety. I want to introduce you to Nikki and Lisa, a couple of members of our surety team, make everyone aware of the different programs that we have and the different types of bonds that we can place for you in your businesses. Those are the main goals. I'm going to pass it over to Nikki, and she's going to get started on talking about our contracting programs.
All right, there could be a whole webinar around contract bonds, so I'm going to highlight some of the options that we offer at Shepherd Insurance. Construction jobs, normally over $50,000, that may be privately funded or that are funded by local, state, or federal dollars, require contract bonds. They provide financial security on a project and assurance to the project owner that the job will get completed per the contract. To get bonded, a contractor has to be pre-qualified by a surety company. At Shepherd, we have several ways to achieve that. We offer small contractor credit-based programs, normally up to $750,000 single job. This type of program would be a fit for new contractors that may have good credit but limited company financials, a one-off situation, or for a contractor that seldom needs a bond. These programs normally have a flat 3% rate for the premium. Over that, we have a small contractor limited financial programs. Those normally go up to around $3 million. That would require some business and personal financial information. The surety will consider internally prepared financial statements with some verification of the assets. These programs can offer a lower rate than the flat 3%. The next step for an active contractor that needs bonds often or that routinely handles jobs over $1 million, we would go with the standard submission bond program. That's where you're submitting your business financial statements, owner financial statements, bank line info, and the surety reviews that and then sets your business up with a single job and aggregate bond line. The rates can vary by surety and type of work, but these programs typically have a rate between 1% and 2.5% versus the 3% for the credit-based programs. I also want to mention, because I know we do have a lot of developers, that we handle subdivision bonds. Those can help free up cash that you may be using on letters of credit. As far as what's an underwriter looking for, one of the key items an underwriter looks at is a contractor's previously completed jobs. They want to see growth from job to job rather than a large jump. Generally, a surety will consider 1.5 to 2 times a contractor's largest completed project. Another key item is working capital, which is your current assets minus your current liabilities. Again, generally speaking, sureties use 10 to 20 times a contractor's working capital for their total bond capacity. So for example, 100,000 in working capital could equate to $1 million in bonding. If we're not able to get the bond limits a contractor needs, we do have access to the SBA. The SBA can work with the surety and a contractor to lend additional support above what a surety has set up. For more difficult cases, we have markets that may consider collateral or funds control as part of the approval process. But basically, we're going to work with all of our markets to get the best program and rate for our client.
Thank you, Nikki. Thanks again for sharing about our contract programs. Lisa, in addition, what other types of bond services can Shepherd Insurance provide?
We provide a wide variety of bond services. Notary bonds are very commonly requested. They are easy issue. And basically a notary bond is a financial, guarantee that a notary has to purchase to be a notary. It's purchased from a surety company. That bond ensures that a notary will fulfill all obligations to protect the public from financial harm for any wrongdoing. Many states, but not all, I believe it's 30 states and DC currently require notary bonds. We also have court bonds, including release of lien, appeal, injunction, probate, and guardianship bonds. We write all types of court bonds, and we depend on strong attorney relationships and our knowledgeable underwriters to get these done. Some riskier court bonds may require collateral, but we have many options available with preferred rates, in-house underwriting authority on some classes. Public official bonds, those are also very commonly requested. That's a type of surety bond that guarantees that an elected government official in a certain position will comply with the rules and regulations. These types of bonds are mostly needed by public officials that handle public funds, and it's behind the individual to ensure that they'll be reimbursed if the official does not faithfully perform duties in the office. It's there to help the public out. A number of different public official bonds are available depending on the requirements or the specific state or the local laws. Those always have to be checked. Most commonly required for individuals serving as court clerks, deputies, treasurers, and other types of city officials. Fidelity bonds, the most common fidelity bond that I see requested right now is an ERISA bond for a 401k or retirement plan. An ERISA bond and fidelity bond is a type of bond that the ERISA bond covers administrators and other fiduciaries of retirement plans that is regulated by ERISA. And the ERISA bond, for example, must be at least 10% of the plan assets that the fiduciary handles. In most cases, the minimum amount of an ERISA bond required is $1,000, and the maximum amount is $500,000 for plans that include, employer-issued securities such as company stock. There is maximum coverage of $1 million. You'll also hear fidelity bonds called employee dishonesty insurance. That's another term for it. They were originally written as three-party surety bonds. Now they're oftentimes more two-party insurance policies, but they do still fall under surety. You also hear them called, financial institution bonds, commercial crime policy, employee dishonesty bonds, or crime insurance. And then the license and permit bonds, those are required by municipalities or other public bodies as a condition to granting a license and permit to engage in specific activity. These are often required for contractors. This bond guarantees that the party seeking the license or the permit will comply with the applicable laws and regulations. License and permit bonds are required in a variety of industries, which is why we have developed custom bond programs for several associations and for specific bond types. For example, Shepherd has partnered with Propeller. They are a bond broker, surety broker, to create an online bond platform for the oil and gas associations, specifically right now, Indiana and Kentucky. We have more state associations expected to join later this year. And there's our links that go directly to the specific bonds needed for the oil and gas industry. We've also created an online bond platform for our truck dealer program, which allows them to complete the application, have their bond emailed directly to them. The streamlined capability of that program prevents a potential business interruption for them because depending on the bond amount, they are almost always instant issue.
Thank you for sharing about our different programs and bonds, Lisa. Nikki, can you explain the process of getting a bond?
Yes, the process to apply for a bond will vary depending on the risk, but normally it includes an application, a credit check, or possibly financial information for a riskier class of bond, or if the bond is $50,000 or more. We've previously mentioned several bonds that you can get directly through our website, like a notary bond or dealer bond. Again, that's at www.shepherdins.com/bonding. There's also a generic request form on there for any contract or commercial bond request you may have. We also have a live chat on there if you have any questions. Of course, you can always feel free to reach out directly to Lisa or myself. We also have a bond department email address that will show on the next slide. So feel free to contact us at that. We monitor that all day long. So just reach out if you have any questions.
Thanks, Lisa and Nikki. I appreciate you guys going through that and kind of discussing some of the programs and our capabilities on bonding. Obviously, we're pretty high level today, but at least wanted to introduce everybody to our capabilities. Appreciate everyone taking some time out of your day to come visit with us and learn about our capabilities in surety and bonding from Lisa and Nikki. One thing that Nikki mentioned was if you have questions that we don't cover today, go ahead and shoot us an email on that bonds@shepherdins.com email address. And a lot of the materials that we covered today can also be found on our website. Go to shepherdins.com/bonding. You can find a lot of the materials there. Also, we have applications on there. They contact us forms like Nikki mentioned, and other resources and tools that are available to you. Mary Ashley, Amanda, do we have any questions that came in the chat here while we were going through?
We do have a few coming in, and then if anyone else has any questions, now's a great time to put them either in the chat or the questions panel. But we do have a few. Briggs, I'll let you answer our first question. Can you write bonds in all 50 states?
Yeah, thanks, Mary Ashley. Yes, we do have the capability to write bonds and other insurance in all 50 states. So it doesn't matter where your business is located, we have the capabilities to help service those bonds, surety, or other casualty and property needs. So yes, we can cover all 50 states.
Awesome. Lisa, you want to answer our next one? The question is, what is the standard turnaround time to get a bond?
That will depend on the complexity of the bond and the bond amount that you're asking for. We have a lot of license and permit bonds and ERISA bonds, which are pretty much instant issue. But the higher the bond amount goes and the more complex the job, there's no guaranteed time, but we do our absolute best to keep you in the loop on where we are in the process of getting your bond to you.
Thank you, that's helpful. All right, we have one last question. Nikki, can you answer this one for me? Can I be bonded if I have bad credit?
Hopefully. Bad credit can preclude you from being bonded, but we do work with markets that consider bad credit. They may charge a higher premium or require collateral, but hopefully we'll have a market for it. Not everyone can be bonded, but we endeavor to use every resource available to get it done.
Great. Well, thank you again, Briggs, Nikki, and Lisa. And thank you to all of our attendees today. I believe that's all we have time for as far as our questions coming through. Any of our additional questions asked, we will put in the follow-up email coming in the coming days. As mentioned earlier, the recording, slide decks, and these questions will all be emailed to you with the registered email. Be on the lookout for future webinars from Shepherd Insurance. And thank you again. Have a wonderful rest of your day.